This is all over the news. The headline, no beer, no can. No, sorry.
No can, no beer.
No can, no beer. Yeah, that sounded wrong.
This is coffee, black
This
coffee.
is black coffee.
It's not beer.
Hello and welcome to another episode of Taking Stock. This is a weekly podcast where we pick one company, one stock and deep dive into it. For this week's company, all I'm going to say is cheers. Oh, shit. Cheers. So the company we picked, if you haven't guessed yet, is UB Group, the parent company of the brand Kingfisher. And the reason we've picked this company, and during the time of recording, this is all over the news. The headline, no beer, no can. No, sorry.
No can, no beer.
No can, no beer. Yeah, that sounded wrong.
This is coffee, black
This
coffee.
is black
it's
coffee.
not beer.
But no can, no beer. And this is all over the news over the last few days. So apparently, obviously, there is a beer can shortage. What's the reason behind a beer can shortage suddenly?
So it's a can shortage overall. It's not just beers.
Okay.
So the government basically said that every aluminium can needs to get a BIS certification, which is basically a quality certification.
Okay.
And they said it's going to be effective from April 2025.
All right.
Right. Now, the manufacturers of these cans, there are a couple of them, Ball Beverage Packaging, then there's another one. Can Pack India. So there are these two. So both of these hit their capacity limits. And they couldn't ramp up in the 6 to 12 months that was available for them to implement this. So that resulted in a shortage. Then the government said that, okay, let's do one thing. We'll allow imports without certification. And that is allowed till the September 30th, 2025. So the domestic...
Our behind the scenes cameraman has just opened a packet of chips. He's eating, and let's continue.
So yeah, the imports, they were insufficient. And that's when the shortage is coming in now.
Okay.
So basically,
So this is all kicked in some, let's say, post September 30th.
Yeah, because imports were allowed till September 30th, and after that they've been stopped as well.
Right.
So I think it's just a function of haphazard implementation by the government,
Right.
Which wasn't very well thought of, because they just implemented something to improve quality. I mean, the intent is great, but I don't think there was enough industry participation or impact analysis done from a very rational and logical perspective.
Right.
So the timelines were basically unrealistic, and this was just implemented, and that has in turn now impacted. Or the shortage is in the 500 ml cans.
Right.
Now, 500 ml cans form about 20% of the beer market in India.
So the others is either kegs or bottles. I'm assuming bottles being the majority of it.
Bottles is majority.
Right.
Kegs would be less than 5%.
Understood.
So draft beer and hence kegs is less than 5%. The rest of it is bottles.
So obviously UB Group, and I'm assuming every other sort of beer brand within India has been affected by this, right?
Yeah. I mean, there is a shortage of about 12 to 13 crore aluminium cans.
So no beer tonight, or bottles only.
Bottles only. So I mean, the impact is real. It is everybody who's been impacted. The three largest that are in India. That is Carlsberg, AB InBev, and UB.
Right.
All three have been massively impacted.
Correct.
However, the impact has been different for each of these.
Okay.
So the impact is much lesser on United Breweries versus the others, because the dependence on cans itself is lower for United Breweries.
Understood. So you're saying basically, United Breweries and all its brands, so this Kingfisher and UB Export and all of those brands that come under this umbrella, they anyway were selling more bottles. And because of that, the beer can shortage hasn't really affected them as much as it would have if they were selling more cans.
Yeah. So on average, and there are various industry numbers that keep differing because every state has a different mix.
Correct.
So on average, United Breweries has a mix of about 55 to 60% on bottles.
Right.
35 to 40% on cans.
Okay.
And 5% is draft or kegs.
Right.
When it comes to industry average, glass bottles are about 20 to 25%.
Okay.
Cans are 60 to 70%.
Also, it's literally the other way around. Right,
Yeah.
right.
And again, draft and kegs is about 5%. And for even United Breweries, some states like Uttar Pradesh and Madhya Pradesh, for example, they sell 75 to 80% in cans.
Okay.
So the impact is very different across
Right.
states because state regulations are different, dynamics are different, supply chains are different. There's a lot of complexity when it comes to alcohol distribution. But overall, if you look at it, United Breweries has a lesser dependence on cans.
So is there a reason behind it? Because you're telling me, let's say if you compare UB to AB InBev or Carlsberg, which are the two major competitors in this country at least, Carlsberg and AB InBev are selling 60% of their sales in cans, wherein for UB it's only 20%. So I'm assuming there's some underlying fundamental reason behind this, right?
So the fundamental reason, number one, is that glass bottles per unit cost about rupees 2 to 3.
Okay.
Aluminium cans will cost about 4 to 5.
Okay. So what do you mean by per unit?
Per bottle.
Okay.
So
the actual bottle or the can. Okay, got it.
So the cost of a bottle is lower.
Right.
However, the infrastructure required to set up bottles as your medium is higher.
Understood.
Because bottles have a recycling element.
Right.
So what happens with Kingfisher, for example, or United Breweries, is that they will roll out the glass bottles. They're usually embossed with the Kingfisher logo.
Right.
Some signage or whatever.
Correct.
And they roll it out to retailers or distributors, whatever. And these retailers then give the bottles back to United Breweries.
Correct.
So then they reuse the bottles.
Understood.
And bottles can be reused some 20 to 30 times.
Okay.
Right. So over a longer duration, bottles turn out to be more economical compared to cans.
Correct.
As long as you have your recycling, reusing, and return infrastructure set up properly.
Correct.
So for anybody who's entering the market late and who wants to scale up rapidly, bottles do not make sense.
Because the initial setup cost for
cost
bottles, and effort. Okay, yeah. And also setting that whole recycle chain also, I'm assuming, takes time. And
recycle or reuse, whichever. So you've got to collect the bottles, wash them, reuse them.
Correct.
So that entire infra setting up takes a lot of time, effort, capital, which inhibits scale. So if you look at Bira, for example, which is a very fresh entrant in the Indian market, or any of the craft breweries which also
have now gone into retail,
none of them will have glass.
Yeah, or even if they do, they're not as prominent as Kingfisher, right? I mean, when you say today, when you mention Kingfisher, that iconic sort of green bottle is what comes to your mind first.
Green or brown.
Green or the Kingfisher strong one.
Yeah.
But on the other hand, if you say Bira, or if you say use any of the newer brands like a Hoegaarden has now sort of entered, which is AB InBev anyway. A lot of these you sort of visualize the can first because those are more prominent. When you sort of go to a wine shop or a bar or whatever, you see them more than the cans more than the bottles for these specific brands.
Yeah. So the inherent reason hence is, I think United Breweries has been one of the oldest in the market. So they've had their time to build their moat, to build their ecosystem, to strengthen it. And so hence lower reliance or dependence is because of the history. And it's a strategic call at the end of the day.
Right.
So what also happens very interestingly is that at the end of the day, glass and aluminium are both commodities. Right. So if your aluminium can't be reused, it has to be recycled or bought fresh and stuff like that. So the second advantage, other than lower cost, is also the fact that when you have to recycle aluminium or when you have to buy fresh aluminium cans, it is going to be extremely sensitive and exposed to raw material price fluctuations.
Correct.
If you're just reusing glass bottles, you're doing away with price fluctuation.
Correct.
For at least the stuff that is getting reused.
Right.
I'm sure like everything is not coming back. They have to buy fresh bottles.
Yeah. So, but there's a certain part of your sort of inventory where there's price fluctuation, and a major part will not have any.
Price fluctuations,
which is a massive advantage.
Exactly.
Yeah.
And the last one is also that from a premium standpoint or a look and feel standpoint, United Breweries, at least the call is that all the premium beer goes in glass bottles because it gives you a more premium feel.
Right.
That's another call.
Right.
Another reason as an advantage is that glass bottles usually prevent beer from taste change or quality change especially in hotter countries like India.
Okay, so aluminium sort of what absorbs heat. Is that what it is?
So again, a few reasons there. Number one is that glass is inherently inert in nature.
Okay.
Inert basically is anything that does not react with other materials. Right. So glass is inert. Metal is not inert.
Yeah.
So in order to make metal inert or less reactive to beer, they usually put a plastic film or lining inside the aluminium can.
Understood.
It is not, the beer is not directly exposed to aluminium. So what happens in this case is that sometimes in hotter temperatures, where you're consistently above 30 degrees, 40 degrees Celsius, you will end up in a place where the lining itself can get affected.
Understood.
And when the lining gets affected, there is a higher chance of the beer getting in touch with the metal.
And then that can sort of change the taste or affect the quality or whatever a little bit.
So the lining is one part. The other part is that glass is usually thicker than aluminium. So the ability for heat to transfer into it becomes lower. Additionally, aluminium is a conductor of heat.
Right.
So it's gonna be prone to temperature increases faster compared to glass. So overall, beer, whenever it gets affected by high temperatures, there are a couple of things that happen. Either oxidation happens, or there is some other effects that usually results in, that cardboardish taste that you get from beer. So that is usually a function of oxidation.
Understood.
So whenever that happens, so the chances of oxidation happening are less when it comes to glass bottles versus that happening in aluminium cans.
So, like another thing, when I was reading the research bits, right, what I was sort of understanding is that, as you said, India being a hot country and chilled beer sort of go hand in hand, right? I think there's no two ways about it. That the beer drinking experience or the beer consumption experience is extremely crucial for a good beer consumption experience, that the beer has to be chilled. Right. And the difference between a chilled beer and a warm beer can actually affect the sale. Like if the beer is warm, you probably will go for an alternative. Right. Now, UB, from what I understand, is that UB also has certain specialized coolers in place, which are a massive competitive advantage. Right. So what's that about?
So it's those, right? You walk into a wine shop. Not a wine shop. You walk into any kirana store, for example. You see a fridge by Pepsi, Coke, or whatever, right?
Correct.
What the cola market has done in retail is what United Breweries and now the other players are doing in the alcohol market.
Right.
So basically the same logic applies for cola as well. Any soft drink in India, you want it to be chilled because it's a hot country.
Correct.
And when you want it as an impulse purchase, as an immediate decision, you don't want a process to follow after it. You're drinking it, consuming it immediately. Right. So you want it cold. So the strategy that these guys applied was that you fit in coolers everywhere. And once as Pepsi, for example, you fit in your refrigerator. The shop owner is going to prefer you. You've done him some favor. You've got branding, you've got marketing, multiple benefits.
Correct.
So the same thing getting repeated in the alcohol industry.
Right. But UB is providing the refrigerators or the coolers, if you would call it. Right.
Yeah. So UB
so basically, so let's sort of break this down. Right. So UB is providing these refrigerators to your wine shops and your sort of last sale retail
last
points,
mile,
right? One is obviously the advantages that, there's marketing, shop owners will give you more preference, etc. But how do these coolers give UB a competitive advantage over? Because when there's a UB cooler or a Kingfisher branded cooler, the shop owner is going to put every beer inside, right?
Yeah, so that is a problem, right? I mean, you see a Pepsi fridge full of like
Coke.
So one is you can't control that. I mean, that is absolutely not in the control of the provider.
Correct.
The advantage that it provides is so branding, of course. Branding is going to be the prime advantage. I'm sure these guys are doing some amount of a quality check as well. So whenever restocking is happening, the company's guy is probably going there, or the company's distributor is going there and putting stuff in. I'm sure they're able to do a quality check at that time and say, boss, like,
my beer's got to be in front. I'm giving you fridge. Giving you the fridge.
So you better.
Correct.
So I'm sure there is some course correction happening.
Right.
So I wouldn't entirely believe that it's not being benefiting.
Correct.
The advantage, other one which probably isn't a very primary advantage, but that appeared as an advantage because of the can shortage. Is that now all of these coolers, not all of these, many of these coolers are very premium in nature.
Right.
They're also fitted with some IoT devices.
Okay.
Just to track
Right.
how many cans are there,
Correct.
To restock on a
and
timely
everything.
basis
Yeah.
and stuff like that. So when the can shortage happened, United Breweries was actually able to figure out which are the centers with a high can concentration.
Right.
So as soon as that got over,
They supplied the bottles immediately.
put the bottles in.
Right.
So the impact of the can shortage was actually the least on United Breweries, whereas United Breweries has the highest market share.
Correct.
And it was maximum for AB InBev and Carlsberg, where their market share is lower
Right.
compared to United.
Plus, also for United Breweries, as you said, right, only 20% of their entire sort of beer sales is cans. So places where cans were running out would have been much lesser for UB as opposed to AB InBev and Carlsberg, etc. Right?
Yeah.
And I think so. That's where the cooler competitive advantage essentially comes in.
Yeah, essentially from, in this case, the can case, two things. One, less dependency, and second, the coolers sort of providing intelligence.
Right.
But overall, if I have to also sort of break down into looking at or drawing a parallel between the cola market and the beer market, United Breweries gets a first mover advantage when it comes to putting these machines in.
Right.
Coolers.
Right.
So basically, if you look at the hyper growth that the cola market achieved in India, it was back in the 1990s. So the cola market was very, very nascent compared to where the beer market is.
Correct.
Early in development compared to beer market. I think the beer market is now picking up in India. So in terms of overall penetration, cola has reached maturity. There are millions of end touch points where cola can be bought.
Correct.
However, if you look at this one, beer, for example, with United Breweries, they're selling in 90,000 outlets.
Okay.
Versus probably a few million when it comes to
cola. Yeah.
Cola, right? So there's a large difference in terms of.
But I'm assuming because it's an alcoholic beverage, there's certain regulations and restrictions also come into play, right?
Yeah. So the point I'm trying to make is that United Breweries, while it has made this move, I think it gets an early mover's advantage.
Right.
One, because it has 50+% market share. So it's able to strengthen its market share and get into.
You got an audience here.
So it's able to, so much distraction today.
Pratik, come say hi at least.
So they're able to get into the market quicker. Second is it's a capital intensive activity.
Right.
At the end of the day, every cooler is going to cost you between 25,000 and 30,000 bucks. So if these guys are able to get entrenched faster, it's going to give them an advantage because brand visibility is going to obviously come in.
Correct.
Vis-a-vis a Bira or somebody else or a new player, they're going to focus anyway. They're struggling with capital and scale.
Correct.
And then hence they're going the can way.
Right.
Them coming to coolers is going to be a much later stage.
Right.
The other thing that this does is that from a implementation standpoint, I think the cola market is much easier because there is absolutely no regulation.
Correct.
With beer, the problem is that there is complex state by state regulation. Every state has a different regulation.
Correct.
If Maharashtra allows it, out of question. Andhra Pradesh might say no, right? So implementing at a pan-India level is very, very hard. A lot of the states control alcohol sales, like Tamil Nadu.
Right.
So there you don't have to deal with the retailer directly. The retailer is the government.
Correct.
So in that case, you have to negotiate at a whole different level.
Right.
Again, the another complexity is visibility of the cooler. So a lot of retail outlets, for example, have a lot of restrictions in terms of sin goods like cigarettes or alcohol.
Right.
They shouldn't be displayed right up front.
Correct.
They should be somewhere at the back.
Right.
So those regulations make it more complex. So the faster you're able to deal with these regulations and implement and capture a higher share, the easier or better it's going to be for you to maintain your market share.
And I think UB is in a superior position just purely because of the scale and the size and the number of years that it's been around for.
So I think it's almost proportional to their market share. So even in terms of the cooler network, UB currently has about 35,000 coolers placed, which is about a 50-52% market share.
Fair enough, yeah.
AB InBev has about 15,000, which translates to about 22% market share. Carlsberg has about 8,000, which is again further lower.
In line with their market share. But okay, so if we just look at, zoom out a little bit, right, and look at just the beer industry and the market as a whole. Now, is it safe to assume that beer is probably one of the fastest growing alcohol markets for beer, the fastest growing alcohol markets is India.
Oh, I wouldn't know that whether India is the fastest growing.
No. So what I'm trying to get at, I know I sort
Beer
of confused
amongst the-
myself also a little bit, but what I'm trying to get at is that within all the alcoholic beverages that are available, whether it's your hard liquor, spirits, beer, wine, etc.
Yeah.
If you just take across the spectrum, beer would be the fastest growing amongst that.
Yes,
Within India.
within India.
Right? Yeah. So again, I'm assuming hot country, chilled drink.
Infra getting better.
Infra getting better. I think from a lifestyle marketing point of view, also a lot more acceptable than it was probably maybe 20, 30 years ago, where alcohol was sort of frowned upon, where your pub culture, etc., has grown across at least the urban parts of the country. So what are the some of the, let's say if you look down the line, maybe 5 years, 10 years, etc., where do you see the beer market sort of going?
So I think it's established that it's the fastest growing market, right? Despite it being fastest growing, I think industry estimates are that volume growth would be somewhere around 8 to 10%. So it's in the higher single digits. However, I think there are some underlying currents in the beer market which are very interesting.
Right.
For one, craft beers are growing much faster.
Correct.
So there's 20% plus growth in craft beers.
Right.
Second, premium beers, not craft but premium, are also seeing more than 20% growth.
Correct.
And now constitute to about 20 to 25% of the total market.
Right.
Both of these things are going to keep driving your market higher. So your traditional beer is maybe seeing 5 to 7% kind of growth.
Correct.
But is still the majority share.
Right.
But these additional factors are seeing much higher growth.
But I'm assuming your craft beers still sort of will face. So I think craft beers are sort of great for the beer industry as a whole, right? They're a great marketing tool or a gateway drug, as you might call it, right? For the industry as a whole. But craft beer will always be a very hyper-local brand.
It will also be hyper-local, plus it will be, I think, one level above premium.
Right.
It will also be a drink where I think you're targeting a very niche audience, which is a beer lover. You're not targeting absolutely anybody, because somebody who just wants a drink in a club is not going to have a preference.
Right.
So you're targeting an audience who is passionate about it.
Correct.
Possibly.
So again, you go to a very niche audience, people who are probably well traveled across the world, have been to different, matured beer markets, different countries, etc., right? Also, I mean,
tier 2 cities are seeing 20% plus growth. That's the third underlying trend within the beer market. Because a lot of breweries or bars are opening up in tier 2 cities.
Correct.
Much more than urban, because urban density was higher, but tier 2 density of alcohol outlets was lower.
Makes sense. So,
so the original question was...
the original question was that what do you think are the factors driving the beer market growth in India, right?
Yeah, so these 3-4 factors are driving growth. That's for sure. But the other thing that's also resulting in beer expansion is perhaps, and I'm a little dodgy about this, is younger crowd consuming more beer.
Right.
So I think I'm convinced about that happening with millennials, but not with Gen Z.
So, I mean, from what I have heard or read at least, right, and I don't know how much of this applies to the Indian market, but across the world, the Gen Z generation, as you would call it, is sort of staying away from alcohol. They are a lot more health conscious than the previous generations. Us. They've looked at the oldies making all the mistakes and they're like, okay, we're not going to make the same mistakes as them.
But I think for us, the whole thing was it's suddenly acceptable, so you're ramping up on it.
Correct. And I think India was also in a very transitional phase as a country, right? When we were sort of growing up and in that age when you sort of start drinking. But I think I agree with you, right? With the millennials, it's definitely growing and it is going to keep growing. I don't think there's anything that can stop that. But from a Gen Z point of view, Gen Z and the generations coming after that, I'm not sure if beer would be their choice of the preferred choice of drink. I also see a major rise in white spirits like gins, tequilas, etc. Purely one, because it's considered healthier. Overall, I think the younger generations are staying away from alcohol as a whole. So that might possibly be one of the things that could slow the beer industry down a little bit.
But I think our worldview is also very skewed by what's happening on social media, what we are hearing in our
Absolutely.
circles. Because interesting fact, and which sort of underlines our argument about why beer will continue being the highest growing, maybe, spirit over the next few years, not spirit, but alcohol beverage, is that India's per capita consumption
Right.
is at 2 liters per annum.
2 liters per annum.
Yeah. Beer.
Okay. I mean, that's 4 cans or
Essentially.
3
yeah.
bottles.
Yeah. Now, guess what the global average is?
I would say at least. I mean, I'm probably the wrong person to ask this because I'm planning on drinking 3 liters tonight. But I would say about 15, 20 liters.
23 liters, not bad. Not bad, I guess.
Yeah.
23 liters. And I mean, we've both lived in the UK. We've seen how
Right.
beer consumption.
Correct.
I think UK must be like double of 23 as well. I'm
Definitely.
it must be close to 100 liters.
And I think across major tourist destinations, whether you see, beer is a very globally accepted drink.
Yeah.
Right. So
It's almost like, I mean, you probably don't even call it alcoholic in like a lot of places. You say, I mean, you as casually taking it as you're
Correct.
taking a Coke out of a fridge.
Exactly. And I think the old, that's what, when you were mentioning the soft drink industry and beers, I think the only difference is the regulation aspect that comes in our country. And outside India, obviously, those regulations aren't as strict as it is in India.
Yeah.
Okay, so anyway, let's sort of move forward, right? So now that we've sort of established that beer is one of the fastest growing alcohols in the country, the market is definitely poised to keep growing over the next decade and beyond. What does this mean for UB's current profitability and obviously valuations?
So from a UB perspective, it's the highest market share. And that continues. There is a threat to that market share because of newer brands.
Okay.
Acceptability of newer brands is much higher. People want to try stuff out. And as you said, there's a larger population who wants premium stuff.
Right.
United Breweries, along with United Spirits, now the separate companies, but both of them have done a phenomenal job of premiumization.
Right.
So they're almost sort of driving premium categories, introducing new stuff, able to roll out stuff very quickly, try it, test it, scrap it, introduce new stuff.
Right.
And you've seen that with Kingfisher as well. The number of sub-brands that have come in.
So your Ultra, and now I think UB also, under the UB umbrella, you have Heineken under that umbrella. So Ultra Max, and these are all sort of going into the premium category. Right?
Yeah, so
they're turning it into a lifestyle brand essentially.
Yeah, so they've always like tried new stuff and kept the premiumization on. However, I think at this point in time, about 10% of total sales for United Breweries come from premium categories.
Right.
90% is still your standard stuff.
Correct.
Right. However, the difference is that while your total volume growth is about between 7 and 11% YOY over the last 4-5 quarters, your premium volume growth is between 30 and 50%.
Okay.
So there's phenomenal growth being seen in the premium.
Because I think premium is a very, it's adopted by the newer generations faster. It is a very urban.
Also, it's smaller. The base is smaller.
Correct.
So you don't have the legacy base, which has
your
to be
premium and
churned.
strong Kingfisher or the UB Export, the old beers have. Yeah.
So these beers are primarily Kingfisher Ultra, Amstel Grande, Heineken Silver.
Right.
And these make up for 10% of total volume, but I'm seeing 40-50% growth year on year. So supreme growth there. So overall, I think if the market is expected to grow at, say, between 7 and 9% or 8 and 10%, United Breweries has historically outgrown the market, and that's why market share gains have happened. It can be a fair assumption that market share gains continue.
Right.
At a mass level.
Right.
Of course, new beers will come in and etc., but the volumes are too small to make a difference.
Correct.
Right. So when it comes to your bread and butter or your usual
bread and butter, your breakfast of champions,
your traditional stuff, UB will continue sort of ruling that market, if I may. So you can keep like expecting double-digit growth, which they have delivered, maybe a little slower, but surely there. Additionally, I think they've faced a lot of issues when it comes to the margins. So margins have been very volatile. They have been very suppressed. There is immense pricing pressure at a lot of points in time, because of which they're not even able to, say, increase pricing a lot.
Right.
Pricing pressure also emerges from the fact that any excise duty change also results in a pinch for the user.
Correct.
So these guys have to be extremely sensitive about any pricing change.
Because I'm assuming also India as a market inherently isn't very loyal, right? I think if one brand sort of increases the price and the other brand, people will switch their loyalties overnight.
In fact, they're not even loyal when it comes to, forget brands within alcohol. I'll give you an example. Recently, there was a hike in excise duty in Maharashtra on spirits.
Right.
Not in beer.
Right.
Expectations are that beer volume will be double digit in Maharashtra.
As long as you get drunk.
Right? Yeah, that's the whole thing, right? So loyalty, forget about loyalty between beer brands.
Right.
We're talking about loyalty between alcohol categories as well, right? So anyway, so point is that margins are always under pressure for someone like a United Breweries because of the whole pricing issue and new competition coming in. So they have to be very, very sensitive and apprehensive about increasing pricing.
Right.
And hence they're doing a 10% operating margin.
Correct.
So imagine a company with 50+% market share
in
a market that is growing double digits and that is getting premium. And you control a lot of the coolers and your operating
your distribution, etc., etc.
Even manufacturing, doing they have 79 facilities all over the country. Right. So they're operating at a whole new level and still an operating margin of only 10%.
Correct.
So there's obviously like something very, very gravely sensitive about this topic. So I think one of the critical factors for UB going forward is to monitor the operating profit margins. And I feel a lot of the stock's performance will be dependent on how the operating profit margins move over time.
Right. Makes sense. And what would you look at the current valuations of the stock? Right? What's your view on that?
So valuations, again, I think it's a very tricky one to look at when it comes to United Breweries because it's the only beer company listed.
That's listed, yeah, that's true.
So there is no comparable as such. So if I have to just broadly look at what the AB InBev or Carlsberg valuations globally are versus UB, if I have to take the, say, 2-year forward multiple or FY27 multiple, the forward PE for United Breweries would come to about 60 times.
Okay.
Yeah, price to earnings.
Right.
AB InBev would be between 25 and 28.
Okay.
Carlsberg would be 22 to 25.
So you're saying UB is overpriced?
I wouldn't say overpriced. It is at a premium of at least 2.5x.
Right. But you're also sort of comparing different geographies completely, right?
So that's what. So while if I'm forced to make a comparison, I would make a comparison with these two.
Right.
But then the differences emerge in the fact that beer markets there are more mature.
Correct.
You are in an emerging market. Also, UB has a 50+% market share. It's the undisputed leader in this market versus that's not the case for those two. Additionally, they have a lot of international presence. They have international presence, but
they're predominantly Indian.
And at the same time, so all of these things make UB or make a case for UB to trade at a premium. However, I think what does not get factored in is the fact that Indian regulations are extremely
I was just going to get to that, right? I'm assuming it's quite fair to assume that UB or any sort of liquor brand in India is at the helm of the government. And any change in policy, any change in regulations, any change at a macro level can really, really damage their
I would actually
future,
put 2x gravity on that. I'll tell you why. Not 2x, multiple times gravity on that. Because, see, usually as a group, like as Paterson Group, for example, we avoid companies with a lot of regulatory intervention.
Correct.
Right? As a thumb rule, because you don't want to lose sleep over it. There is low predictability. There is high volatility. And there is a lot of, and at the end of it, it's clients' hard-earned money.
Right.
You don't want to put it in a place where suddenly there is a regulation change which is unfavorable and you've lost the money to a large extent.
Right.
So hence we avoid getting ourselves placed into highly volatile regulatory places.
Right.
And volatile is okay as long as the quantum is low, but quantum is also high.
Right.
Just as an example, we spoke about the hike in excise duties in Maharashtra.
Right.
There has been a steep hike in excise duty in Karnataka as well, which has actually resulted in some 15-17% volume decline for beer in Karnataka. West Bengal, there has been a tax increase. Telangana, Kingfisher or UB Group is finding it very hard to get money back.
Right.
So they've sold their inventory, but receivables are a problem.
Correct.
So there are multiple issues across states. Why I said gravity was much more is because sometimes in regulatory environments there is a central government or central authorities taking steps,
Right.
like the aluminium cans, for
Correct.
example. In alcohol, it is a state level matter.
Yeah.
So one state is doing something else, the other is doing something else, and you're out for a battle on multiple fronts.
And I'm assuming, in India, right, you have your major consumption or major beer drinking states.
Yeah.
And if any change in regulation in those states can massively, one small change over there or even a change of government can really massively impact the company.
It can. And again, I'm sure there are restrictions in terms of, or there are multiple complexities in terms of, so for example, if West Bengal volume is drying up or Karnataka volume is drying up, can you transport it to Andhra? No, you can't.
Yeah, you can't. Correct.
Because it's the state revenue that is at risk, right? So that's a bigger problem. So inventory management, etc., becomes a whole issue. So point being, while the valuation is more than 2x compared to global peers, and for the right reasons in terms of position, I think there has to be a discount factored in also because of the regulatory environment. So that would be one lens of sort of looking at it. The other lens I would probably put to it is maybe compare it to companies in India. However, because you don't have beer companies, you compare it to a wine company and you compare it to a spirit company.
Okay. So
Again,
let's say a
different
Sula.
Yeah.
Right.
Because, and you can make this comparison because the regulatory environment is now the same.
Similar, yeah.
Right? However, the underlying dynamics are different. So just to give you a brief example, UB has 50 to 60% market share in the beer market, right? Sula has a 50 to 60% market share in the wine market.
Right.
United Breweries last year did a sale of close to 9,000 crore.
Okay.
Sula did 580 crore.
580 crore versus 9,000 crore.
Yeah.
So it's almost.
So it's a
8-9 times.
Difference.
Yeah.
Similarly, United Spirits has a 25 to 30% market share in each of the categories.
Right.
Whiskey, vodka, etc. They're 25 to 30% in most categories.
Right.
Their sale was 12,000 crore. So the spirit market is much larger than the beer market, and then the wine market is minuscule. It's so small. So one is to realize that scale is different.
Right.
However, it boils down to what is growing faster. So wine is probably going to grow faster because the
base
level
is small. Yeah.
But historically, beer has grown faster in the last 5 years. Margin, again, if I look at operating margins for beers is the least at 10%. Sula did 26% last year. United Spirits did 18%. Return ratios, 14% for UB, 13% for Sula, 26% for United Spirits.
Right.
So again, it's going to be a very bad comparison if I make it. But coming to valuations, if I look at the PE for United Breweries on a 1 year and 2 year forward basis, it's 70 times and 60 times, which is the highest again. Sula's at about 25-20 and United Spirits is about 60-50.
Right.
So from that angle, again, I think it's an expensive stock, given the fact that despite its positives, in this case now, although it's a level playing field when it comes to regulation, you're talking about lower operating margins and lower return ratios.
Correct.
So in that case, it's pretty.
So yeah, it is a tricky one.
It's a tricky one.
Fair enough. Okay, let's. I think we've gone into quite a bit of detail over here, and I think it's time to move on to the community question for this week, right? So every week, basically, from all of our social platforms and all the questions and DMs and comments and everything that we get, we pick one question and try to answer it in the best way possible. This week, we got a question from Sandra N. from Kochi. So Sandra asks, I am just starting out on my investment journey, have started doing SIPs and bought a few stocks as well. What books would you recommend in order to start learning investing?
None.
Nothing from here. Or maybe what's behind the books?
No, none really, because I mean, it's not something you can learn after reading a few books. I think investing wrongly, people think that reading a few books on investing will make you learn investing. I think while we talk about valuations and technical stuff, just look at the podcast, right?
Right.
You're spending 75 to 80% or more of the time on understanding the business.
Correct.
And then you're spending a little bit of time on
Valuation and profitability and all of
these
that. Yeah.
depend on the business.
Correct.
So I think the focus should not be on reading investing books. The focus should be on reading
Understanding businesses as a whole. Yeah.
So one of my, like, if I have to name a book because the question is asked, it would be Bandho Investor by Monish Pabrai.
Okay.
So that is a book which talks about like Gujaratis and Marwadis and how they do business.
Right.
And how it draws parallels between investing and businesses run by them.
Right.
So I think that's a great book to start with.
We'll put the name up as well over here.
Yeah. So
also, I mean, I'm from what I understand, right? It's never, when you say, okay, the skill that you're really sort of chasing here is understanding businesses, right? It's never a skill that, okay, now I've learned how to understand businesses, right? It's always an evolving skill. It's always a learning curve, which never really ends.
Yeah.
You can't.
Plus, I think while I said that you spend only 25 to 30% of the time when it comes to financials and valuations, it's also a function of how much detail you can go into as a conversation.
Correct.
If I have to look at how much time I'd spend modeling or understanding valuations, it would be probably much more.
Of course.
And that comes after studying finance in undergrad, studying finance in postgrad, doing a CFA after that, working for 10 years after that. Then
and being in the industry for whatever that long, right?
That is, which is basically reading at least 3 to 4 hours on a daily basis. So I don't think it's a good idea to even embark on that journey if you're not from finance or if it's not your full-time job. It's best that you give the money to us.
No, but it is true, right? That why try to do everything when you can get an expert to do something for you?
Exactly. So trust the expert.
Fair enough. I guess that's all for this week. I think we're going to go look for Kingfisher cans. You all do the same. Let us know in the comments if you find any in your city. Anyway, thank you so much for listening. Please like, share, subscribe. This is a weekly podcast and we put out our episodes every Tuesday. So thanks a lot and cheers.
Disclaimer. This content is for informational purposes only. None of the stocks, brands or products mentioned are recommendations or endorsements.